All right, today we're looking at NVDA and we're going to show you how to square the range by time and by price. If you look at it in squaring the range by price, it's pretty simple. You're taking the price distance from this former high and this former low. You just nominate a high and a low, and then you use that price distance, which would be 66 points, and extend it over 66 trading days. So in other words, we're using price to give us time. So that's how you get the range in time using a price distance, which you get from that range, your initial range. And as far as the time distance, it's the same, it stays the same as the initial range. So that gives you a nice even square. It even looks like a square. Sometimes it'll look like a rectangle, but it just depends on what sort of one-by-one relationship you're choosing. In this case, we made it simple. We're using 1.1 trading day per 1 point per trading day. So in other words, the scale of this red one-by-one line, it rises at a rate of 1 point per trading day. And I like it because it captures this low here. And you can see if we were to extend this, it would probably give you support up here. In fact, I could do that in a minute, but let's get back to squaring the range by time. We just did it by price. How do you do it by time? Well, the squaring style here is set to price, but we can change that to time. And what I really like about this is that if you take that range in time, which would be 91 trading days, and you add it to the base, that would be, the base would be 86.62. That's the bottom as of April 7th, 2025. You're adding 91 to that to get 177.62, which is the top of the square. So you can square the range by time, you can square it by price, and it works both ways. And you say, well, how do I know which one to use? You try both of them. Figure out what the vibration of the market is and go with it. In this case, I really like it because you can see the one by one. If you were to extend this, you can see it's taking out this move down. This bearish engulfing pattern on the candlesticks is taking out the one by one line. So you have a time and price setup. Why? Because the square is completed as of the 18th of August, and the very next day you took out this one by one. So for Gann, you need both time and price to have a trade. You cannot trade just on a cycle. You cannot trade just on the fact that you violated a Gann line for price. You need both of them to happen together. So the reality is time and price have come together here. You completed the square in time, and the very next day you took out an important Gann line in price. Time and price. When they come together, you get a change in trend. Now, you're going to need to see follow through. This doesn't work every time. Someone could argue, well, maybe you just go down here and go right back up again. But what I would say is this market is overbought. This stock, I should say, NVIDIA is overbought and it's ready for a correction. If you take out this 1/4 division of the square at around 155, that will accelerate the move down to this 50% mark at 132, etc. So you're never going to know on any given day what's going to happen, but you will get degrees of confidence as you take out more and more Gann support lines on the way down. And again, this is not to say that it can't bounce back. It could happen. But I think given how overbought this stock is, this ugly day down could be the start of something big. So, whatever your stock is, you can analyze it in a number of ways. You can do the squaring style by time. You can do it by price. And you're going to get different results each time. You can actually extend this. So if we want to extend it up, we can do that. And that gives us certain information. You see how 1.5 squares up is almost where this thing topped out. So there's a certain geometry there that's important. 1.5 squares up is a natural resistance area, and if a stock can't get above it, it's probably forming a top. So that was important. Now, if you extend over and say, hey, let's go back here to the right. Okay, notice how 1/4 through the second square over in time was pretty close to when it topped. Wasn't exact, it's not always perfect, but I like it. And so we're 1.5 squares up, we're 1/4 of the second square over in time, and you're starting to sell off. Who knows, maybe it sells off all the way into October, mid-October. It could happen. That would be 2 squares over in time. So we're gonna play with this, and we're gonna look at it by time, square the range by time. We're gonna square the range by price, and you can even square the range by time price. Let's see. Let's go back here. Let's see, where was it? Squaring style. See, you can do it by price, by time, by price time, by inverse. You can really get crazy with it if you want. But the most common way to square it would be by price and by time. And any given stock, you could probably try it and see how it works. And you probably have to change the 1-by-1 scale, what they call the price unit, and work with it to see what happens. But that, in a nutshell, is how you would square the range by time and price. If you want to see an example on your stock, hey, think about subscribing to the service. Go to the website, gannanalysis.net, hit the shop button, try it out for a month or 3 months, and I think you won't be disappointed. Remember, if you are a random walker, this is not going to appeal to you. But if you are an intelligent person and you realize that, God doesn't play dice with the universe, and that eventually quantum theory will give way to a universal theory showing that there is a pattern to the universe, and it's expressed very well on Wall Street in stocks, bonds, commodities, crypto, every market you can look at, there is a pattern. It's just a matter of whether you find it or not. So if you're a chartist, a technician, the temptation is to only analyze a stock by price, looking for divisions in price. Gann, the genius of Gann is he said, no, time is important. In fact, time is more important than price. And the reason for that, as I go back here, I'm just going to show it to you again. If we go back and let's see, change this squaring style to time, notice here we exceeded the square in price. But when the square out came due August 18th, it turned down. What I'm saying is time is a stock will not sell off until the time is right. And in this case, by squaring the range by time, we found out August 18th was the top, basically the momentum top. It actually topped here, but this was when it really turned. The end of that cycle, that square is a cycle. When that happens, it turns down. You got the bearish engulfing pattern the next day. You get follow-through selling, and this thing is gone. So Gann strikes again. It's not a random walk. There is logic to when things turn, and that's what Wall Street is afraid of. A fundamental analyst will tell you, kind of like Warren Buffett, don't try to time the market. Gann told you time the market. History will prove that W.D. Gann was a genius and that Warren Buffett was out to lunch. In fact, I have some thoughts about his recent trade in United Healthcare, but become a client and I'll share those ideas with you. But for today, I just wanted to show you NVDA and show you that, hey, this thing is going down, mainly because it squared the range in time. Time is more important than price, but then when you took out the 1 by 1 line, hey, you're starting that move down. This is a big deal.